So there have been two really big headlines this week on inflation, or should I say one on deflation and one on inflation. Earlier in the week, you remember the Chinese economy was deflating again according to year-on-year numbers in July. And more people are asking if the so-called Japanification is now beginning to take hold in China. That is a long period of deflation. Then came the slightly better than expected news in the US economy on Thursday, and people are now asking if the Fed has now indeed done enough on interest rates. Let's take a look at what Mark Ostwald has been saying this week at ADMISI. Now, he's the chief economist and global strategist at the Commodities House, and he says the chance for further rate hike from the Fed now looks to be very low. But the Fed will continue to bang the drum for higher for longer, above all, given that labour demand remains robust and the economy continues to expand. Both of those shoes, he says, will have to fall if the current market rate trajectory assumes an initial rate cut in March 2024 and a cumulative 150 basis points of rate cuts to 4% by the end of 2024. So that's a quote we've had from the Fed. So you can see that the Fed potentially looking possibly as though it might broadly have done enough. But we've seen the US dollar hold onto the recent gains today. We're down a little bit today after yesterday's close, which is the highest close that we've seen in the market for the dollar basket since the 7th of July. A quick update on how to trade this using the markets around euro dollar. The euro, broadly speaking, stronger now. We've had also data out this week on the swaps market indicating that the European Central Bank is likely to have to keep its foot on the pedal so far as interest rate rises are concerned. And this is why I think that the euro has had an appreciation. If you're long on this, your stop goes down here under the 100-period moving average around about the 109 level. 109.95 is where we are. A break at the 110 level would then see this market not see too much in its way before we get to the highs that we saw there back on the 18th of July at 112.76. A quick update on what's happening with the sterling dollar chart as well, bearing in mind what's been going on here in the markets this week with sterling losing out to that stronger dollar.